China's in chaos right now, apparently, in terms of slowing economic growth, bank protests, mortgage protests, exactly what I predicted last year when you guys were talking about China was going to dunk on us. And I said, it's very hard to run these authoritarian countries, and the citizens like to protest when they get the short end of the stick. And here we go. Chinese economy is growing very slowly. They were going to do 5.5% this year. They were only 0.4% in Q2. COVID has a lot to do with this. But there's been a series of bank protests, and the media has been trying to figure out exactly what's going on here. To just set the stage here, rural banks in China, in a couple of provinces, froze a bunch of people's withdrawals in April. Okay, sounds like the crypto contagion in many ways. They had been offering unusually high interest rates, also sounding like the DeFi grift going on here.
No, I think it's more like 2008, Jason. I think I think it's more like the financial crisis in 2008 that was driven by the real estate bubble.
Yes,
they've got their own real estate bubble, which is collapsing there.
Correct, and so there's multiple things going on at once. The authorities haven't said how much money is frozen. Protesters claim it's billions of won, but it's hundreds of millions in the U.S. After weeks without a resolution, customers began protesting. Plainclothes thugs have been hitting and kicking the protesters. And as of Wednesday, a video went viral of the CCP bringing in tanks to protect the banks. Very evocative of Tiananmen Square.
Jacob, I have a question.
So go ahead. Yeah.
So China has a very explicit zero tolerance policy on COVID. Why do you guys think they are so extreme in that policy? Like, any ideas? Like, have they explained why it has to be zero tolerance?
They have not explained that. And if you believe that they're the origin of COVID, maybe they have some insider information about long haul COVID. And that was something I want to talk to Friedberg about, if he thinks this, long-term COVID stuff is a really acute issue. But Friedberg, what do you think?
Yeah, I don't want to answer that question.
Can I answer that if you don't want to?
Yeah, go
Listen,
ahead.
I think the answer is very simple.
But I do want to talk about the Chinese economy.
We got
there's
two
a
more
lot going
parts
on
to
there.
turn over too. Yeah, this is a complex issue.
There's a lot more going on there. So on zero COVID, I think this is coming directly from Xi. This is his policy. And I think that earlier in the pandemic, they were hailing their response, which they saw as orderly and effective at controlling COVID, and they were contrasting that with the chaotic Western response. And so I think that the credibility of the CCP and Xi himself got tied up in this idea of stopping COVID entirely, of zero COVID. And so I think this is coming directly from the top and is having a huge impact on their economy. And I think this is one of the dangerous aspects of a autocratic system is you got one guy at the top making the decisions, and if he's wrong, there's not really a great feedback loop.
And nobody can question him.
Yeah.
There's
exactly.
no questioning the God King. Yeah.
It sort of recalls a situation in China. I think this was about 500 years ago. There was a Chinese emperor who banned shipbuilding and banning having a navy. And because of that, China shut itself off from global trade, and it fell well behind the West, which then explored and captured the New World. There's this question about, the Chinese culture and civilization was much more advanced than the West, than Europe 1,000 years ago. But basically, it fell behind. And a big reason is because of this unilateral decision by one emperor to basically close themselves off from the rest of the world. So you have to wonder, does this autocratic move by Xi basically doom their economy to a recession? It seems like they're not learning from our experience. These lockdowns didn't work. I mean, you can't stop the virus. It's eventually going to get out. Even I saw Biden got the virus this week. I mean, it's out, right? It's endemic now.
Yeah, everybody's going to get it is basically what's happening.
Xi's been making a bunch of heavy-handed decisions like this. So you had, besides lockdowns, it's also the crackdowns. It's the crackdown on the tech industry.
Yeah, the venture funding has plummeted, and so LPs are no longer investing in funds there, with the exception of Sequoia's, which seems to be struggling but is still able to raise some money. And then additionally, founders can't raise money, and founders are questioning when they meet with VCs if they can actually, if the VCs are just meeting with them theatrically. This story that came out this week in the FT, if they're just meeting with them theatrically because they want to still hold out hope that there'll be a venture capital industry, but there may not be a VC industry in China anymore. Let me just give you the housing stuff, and then Friedberg, I know you want to chime in on this. So there's also mortgage boycotts happening at the same time as this Fugazi bank stuff happened. The bank stuff seems to be not the national banks. These are local banks that apparently could have been running some kind of grift where people deposited the money and they ran away with it.
It looks a lot like the savings and loan kind of behavior in the 90s in the U.S.
Yeah, and these are regional banks, to be clear. This isn't the national banks. And so at the same time, the mortgage boycotts are happening at 301 unfinished developments in 91 cities. Homeowners are accusing developers of failing to deliver the apartments they've already paid for. According to Bloomberg, 70% of household wealth in China is tied up in property, much higher than the U.S.
This is downstream of the whole Evergrande thing, right? You got Evergrande. Evergrande basically defaulted, and there were a whole bunch of people who prepaid for their homes. And so they're already paying mortgage, but Evergrande never finished the homes. And now they're rising up because they're saying, why should we pay for a home that was never delivered?
Right.
I just want to take a zoom out because I think it's worth, we can focus on any one of these particular things that are happening and try and diagnose them and dissect them. But if you zoom out a little bit, I think it paints a more interesting picture. Over the last 30 years, right, the Chinese economy grew from 318 billion in 1990 to 10.5 trillion in 2020, right? Incredible growth. GDP per capita, grew kind of in a similar ratio, right? Now from $318 per person to $12,500 in 30 years. I mean, really unprecedented in the history of humanity. China now accounts for 20% of global GDP from less than 2% in 1990. Now, if you look at historically what drove that growth, we all talk about manufacturing, right? Manufacturing accounts for about a third of the economy. And manufacturing as a sector was growing in China 25% year over year in 2008. And then only grew 6% in 2022. It's basically, kind of reaching an all-time low in recent years. So that's historically been the driver for growth of this economy. And so much of the bargain between the people and the Chinese Communist Party has been keep giving us a better life, keep growing our economy, keep giving us more housing, more stuff, more food, more safety, more security. We'll support the CCP. And the challenge that the CCP is having is that a lot of that growth, the core growth engine, is starting to slow. So manufacturing is slowing. Then real estate was growing. And so real estate accounts for 7% of the Chinese economy. And I've got a good stat for you guys here. In 2005, 250 million square meters of real estate was sold in China. In 2021, 1.5 billion was sold. Every year it's been incrementing. So the amount of real estate that's being produced and sold was increasing like crazy. This year it's collapsed. So it's down forecast to be about 1.25 billion now. So the first decline in real estate building and sales. So that part of the driver of the economy in China is now collapsing. And then the financial services sector accounts for 8% of the economy. And that's been growing because it's leveraged off manufacturing and real estate and all the capital that's flown in, all of which is slowing down and stopping. There's $58 trillion of assets in China, generating about $700 billion of annual profits for the financial services industry, insurance, banking, lending, and so on. So a lot of the conflict and the things that are starting to fall apart, which may just be the tip of the iceberg, is a function of a fundamentally slowing economy and the forecast and the outlook for an economy that doesn't have the drivers it's had historically. And things are starting to come off. The wheels are starting to come off a bit. And so, look, the advantage they have is central planning, long-term investments, being able to kind of be thoughtful about this. But in order to do that, there's certainly going to be a need for the CCP to keep people in line as some of the long-term bets hopefully play out for them, as they would say. In order to do that, they're going to have lockdowns and other sorts of mechanisms of regulatory control over the people. But really, this could be the beginning of some of the unwinding and real concern about, is there a core economic growth engine in China that can save them? And what will it be?
I think all of this, if we look at what's happening in the economy writ large, Chamath, the global slowdown plus inflation is now causing a stress test on every country. Sri Lanka's stress test, showed us what's happening with their farming issues and with corruption. And here in China, the stress test, I think you would agree, is showing what's going on in terms of, banking, mortgages, real estate, and obviously this surging middle class and what their expectations of life are. So what's your take on what's happening in China? And are they, how does this add up in terms of our rivalry with them as our contemporary?
At a very macro level, China has one massive problem, which is one of population. It's hard to get an accurate count, but it is an aggressively aging population, which was the result of the one-child policy for a very long time. China has sort of been on their heels trying to adapt that policy. But really, the last data I saw, I tweeted this out. It was a little while ago, Nick, so maybe hard for you to find in my Twitter feed. But it was a projection of China's population, which essentially showed it contracting by almost 50% by 2100. So that's a really, really bad situation. Now, when you have a slowing population, then the economy has to morph. Why is that? When you have a young population, so for example, take what China was 20 years ago when it entered the WTO, or what India is today, when you have lots of young people, you can on-ramp them into economically productive activities like manufacturing. The problem when those folks accumulate middle-class income and wealth is that they age out of those kinds of jobs like they did in America. And what we seek are services and service-level jobs. And you spend more money, you spend it in a different way. So as populations age, your economy has to turn over unless you have a large bulwark of young people that is constantly growing to take up more of the slack, the economic slack, to pay for these folks who have different lifestyles, more savings, and different needs, specifically healthcare. That's China's enormously big problem. So when you see them talking about 6% GDP targets and you think, how does a country that big even grow at 6%? It's because they're reverse engineering for what they need to create economic vibrancy in that country. And so when you start to look at 2%, which in America you'd say 2% is great. We would like high-fiving each other for 2%. That's not a sustainable level of growth for what's happening inside that country. It does not create enough of expansion economically to cover all these folks. That is a really, really big issue. So as that happens, I think what we need to do is figure out how to be competitive. Now, this goes all the way back to our first conversation. Subsidies don't make us more competitive. Things that governments can do to make us more competitive are long-term, drawn-out tax incentives that change the earnings capacity of companies. Why? Because then the capital markets reward those businesses. Jason, you just mentioned it. Why is the Chinese capital markets in difficulty? Nobody knows what the long-term earnings are. How do you forecast it? It's not simple anymore. It's not a model. It's not an interest rate. It's not a discounted set of cash flows, right? And so that's how they need to refactor themselves. They need to have a much larger population. If you don't have that, you have to figure out how to do it with immigration. If you don't have that, what China has done is they've tried to go to Southeast Asia and to Africa, and they've tried to create that synthetic form of a growing pyramid, right? Now that can work as long as the balance sheet of the country supports that, because ultimately you're still talking about moving money offshore, okay? So I think they're in a little bit of they're in a pretty difficult spot.
The most difficult spot is the one that Xi put them in. If you get rid of entrepreneurship, if you get rid of high growth companies that create the opportunity on a global scale, and then you take DD off the public markets, you don't let education companies become public, or you basically get rid of their little co-opting of capitalism and venture capital, their whole society is going to become slow growth. And slow growth in a country that doesn't have safety nets is really dangerous. Sachs, your thoughts in terms of competition versus America?
Yeah, okay, let me get to the competition in a second. Just to build on what Chamath said, the birth rate or the fertility rate in China slipped to just 1.15 in 2021, so last year. It takes 2.1 just to maintain your population at replacement level. So, and this is lower than even Japan, which is also shrinking as a country. Japan's at about 1.3. The US and Australia are at 1.6, but we get above 2.1 because of immigration, and China doesn't have that. So they've got a huge demographic problem. To Chamath's point, it's going to be something like, well, the population is shrinking by 40% with every generation. That's what these numbers imply.
Insane.
The numbers are, it's going to be under 600 million by the year 2100, but I don't understand how it wouldn't even be less than that if it keeps going at this rate. So there, and the commentator, Peter Zeihan has, or I don't know if that's the right way to pronounce his name, Peter Zeihan or something. Anyway, he's pointed out that China is facing demographic collapse in the next decade or so. On top of that, like you're saying, Jason, you've got Xi emphasizing Maoist economics. He basically says he thinks that the Chinese economy, again, he stresses the need for socialist characteristics. And he seems to be bringing back that sort of communist ideology to their economy. And they've basically really cracked down on entrepreneurship and venture capital. It's really a self-owned. I mean, they've moved away from the policies that have made them so successful economically over the last 40 years. And then on top of that, you got this debt crisis and this housing crisis. So it really looks like the deck is stacked against all of them. And you're asking, what does this mean for us? Well, I think it depends on whether you look at it economically or geopolitically. I think if you look at it economically, you'd say that it's bad for us because our two economies are economically linked. There's a lot of dependency. They've evolved together for a long period of time. And if China has a collapse, then they're so big now that that's going to have, I think, global repercussions. There's going to be contagion. But the truth is, if you look at it geopolitically, and geopolitics is more of the balance of power is a zero-sum game. Economics can be a positive-sum game, but the balance of power it's definitely not a positive-sum game. You'd have to say it's good for us because the reason why China has become such a threat is because of its growing economy over the last 40 years.
Yep.
And look, I mean, what they've done and what they've been doing over the last decade or so is translating their economic might into military might. And that has given them the capability to now threaten their neighbors, to become more belligerent, to basically rattle the saber against Taiwan. And if their impressive economic growth continues for the next couple of decades, as it has until now, there's no question that they will basically try to assert their hegemony over East Asia. And Taiwan will be a huge flashpoint, but there's also flashpoints in the East China Sea with Japan over the
But they're going to need a bankroll to do that. So if their economy's not growing, they don't have the bankroll to do it. They're going to have to look inward and say, hey, we got to fix these domestic problems. We got to get people to stop protesting in the streets. This middle class is demanding of jobs. The great news for what's happened in China, and I think this is why the people there are very happy, is the number of people living in poverty has plummeted. When they started tracking this data in the 80s, high 90% of people were living in extreme poverty or poverty. 99% of people were in poverty on the global definition of it. And now, it's just plummeted to, a couple of 100 million people. So a couple of charts for you here, but and the data is obviously, it's very hard to understand what's going on in China because a lot of it is opaque, but just the number of people on a percentage basis living in poverty has gone. And now the number of people who are in the middle class has surged. That creates another dynamic. Those people want to have a great life. They want better jobs. They don't want to work in factories. They want to have a more information-based economy and a better job than 60 hours a week in a factory. That's why they're moving their factories to Africa and other places.
I mean, I don't know if that's absolutely true. I think that China's manufacturing sector is aiming to evolve. So, China has about 3 million factories or manufacturing facilities throughout the country, employing about 112 million people. The U.S. has about 300,000 factories employing about 12.5 million people. The output of our factories is about 70% of the output of China's factories in aggregate. Sorry, the total production output of all the factories. So we have very high value outputs coming out of our factories and high leverage. China is observing and obviously recognizes that there's an opportunity probably to evolve their manufacturing capacity to be higher leverage, higher value output. And so there is going to be, from the long range perspective, planning and investment in technology that allows those factories to become much more sophisticated and create much more higher value products, moving up from what is effectively just cheap labor putting things together in an assembly plant to being things like additive manufacturing, 3D printing, automated manufacturing, biomanufacturing, et cetera. And I think this is particularly going to be realized because China announced that they're building 400 nuclear power plants. That drops the cost of electricity to under 5 cents a kilowatt hour. In the US, manufacturing electricity typically costs around 11 cents per kilowatt hour, 12 cents per kilowatt hour, in that range. So if factories become much more automated, they start to become a function of the price of electricity in terms of what they can output. China's going to have a huge advantage as these nuclear power plants come online over the next couple of decades and these facilities get upgraded. So there is a plan, right? Remember, this isn't just like... They do have a
plan, and the reason they have that plan...
There is a question of, do they get there fast enough to drive economic growth that actually supports all these other industries like real estate and finance that they've become critically dependent on, because those industries only work if there's a core economic driver, a core economic engine that's working here. So this energy infrastructure, this new manufacturing infrastructure, these are things that, by the way, they can do really effectively because they're not working on 4-year and 6-year political cycles. They can take a 5, 10, and 30-year outlook and make a plan and invest against it. It's what they did from 90. So I wouldn't count them out, but there's certainly a lot of challenges they're facing right now. And it's a big question mark right now, what's going to happen.
Well, and to your point, factories in China are, factory workers getting paid over $6 an hour now. In Vietnam, $3. In India, even less. And that's why you're seeing a lot of folks, I don't know if you're seeing it in your portfolios, but we've seen a lot of folks looking at India, Vietnam, and moving factories there. And obviously Japan has been incentivizing.
China's not going to just lose their manufacturing edge. They're not just going to say, hey, we give up, let everyone go to Vietnam. They're going to try and upgrade the capability of those factories and say, hey, instead of just putting together parts with $6 an hour human labor, let's start to do the more sophisticated stuff. So then Freeberg,
the next card that turns is, well, what happens to those factory workers if they've been automated out? What do you do with hundreds of millions of people working in factories who now have been turned into robots? And then if they're going to be the answer is information economy. If it's going to be an information economy, you need venture capital and you need new companies to create those jobs. And they just killed that.